Most beginners lose money in crypto not because crypto is a scam, but because they start the wrong way. If you're new and thinking about trading futures, stop for a second. In this video, I'm going to show you how to trade spot on Bitget safely step by step, in a way that protects your capital instead of risking liquidation. And make sure you stay until the end because I'll show you how to get a 20% trading fee discount, plus up to $6,200 in welcome bonuses. Why beginners should start with spot. If you are new to crypto, spot trading is the safest place to begin. With spot trading, you actually own the asset you buy. There is no leverage, no forced liquidation, and no sudden wipeout because of a small price movement. That alone reduces emotional stress dramatically. Many beginners jump straight into futures because they see screenshots of big profits, but they don't see the losses behind those screenshots. Spot trading moves slower, but it gives you time to think, learn, and build experience without the pressure of leverage. What is Bitget? Bitget is a global crypto exchange that offers spot trading, futures trading, and other advanced features. For beginners, the most important thing is that the interface is simple and easy to understand. You can buy and sell crypto directly, manage your portfolio, and monitor your trades without dealing with complicated tools. The goal here is not to overwhelm yourself with advanced strategies. The goal is to learn how to execute clean and simple spot trades correctly. Create account and activate your benefits. Before you place any trade, you need to create your account. If you're going to trade anyway, you should reduce your fees from day one. Use the registration link in the description and enter the referral code rebate20. When you do that, you get a 20% discount on both futures and spot trading fees, plus access to welcome bonuses up to $6,200 depending on your activity. Trading fees may seem small at first, but over time they eat into your profits, especially if you trade frequently. Reducing fees is one of the easiest ways to improve your long-term results. Deposit funds safely. Once your account is set up, the next step is depositing funds. You can deposit USDT or transfer crypto from another wallet. The most important rule here is to always double-check the network before confirming the transaction. Sending funds to the wrong network can result in permanent loss. Take your time, verify the address, verify the network, and only then confirm the transfer. Rushing is how beginners make expensive mistakes. Understanding spot trading, now let's simplify spot trading. Spot trading means you buy a coin at the current market price or at a price you choose, and you actually own that coin. If the price goes up, your asset value increases. If the price goes down, your asset value decreases. There is no borrowing, no leverage, and no liquidation price. That's why spot trading is ideal for beginners. It gives you exposure to price movement without the amplified risk of futures. Market order vs. limit order. There are two basic order types you need to understand. A market order buys or sells instantly at the current market price. It's fast and simple, but the exact execution price may vary slightly due to market movement. A limit order allows you to set the exact price at which you want to buy or sell. The order will only execute if the market reaches your chosen price. For beginners, market orders are easier to use, but limit orders give you more control. Understanding this difference is essential because using the wrong order type at the wrong time can impact your entry and exit. How to place your first spot trade. To place your first trade, choose a trading pair like BTC USD. Decide whether you want to buy or sell. Enter the amount you want to trade, review the details carefully, and confirm the order. Start small. Do not invest all your capital in one trade. The goal is to learn how the platform works and how price moves affect your balance. Once you understand the process, you can gradually scale your position size. Common beginner mistakes. One of the biggest mistakes beginners make is buying during hype. When a coin is already pumping hard and everyone on social media is talking about it, emotions take over. People buy at the top and then panic when the price pulls back. Another common mistake is selling during fear. When the market drops slightly, beginners panic and sell at a loss instead of sticking to a plan. Overtrading is another silent killer. Just because you can trade does not mean you should trade constantly. Every trade involves fees and risk. Discipline is more important than activity. Simple strategy for beginners. If you are just starting, keep your strategy simple. Focus on strong coins with high liquidity instead of random small tokens. Avoid chasing sudden price spikes. Instead, look for pullbacks or calmer market conditions. Think long-term rather than trying to double your money overnight. Spot trading rewards patience. Even holding solid assets over time can be more effective than trying to time every small movement. The goal is not to win every trade. The goal is to manage risk and grow steadily. How to manage risk properly. Risk management is what separates beginners who survive from beginners who quit. Never put all your capital into one single coin. Diversify moderately and always keep some funds uninvested. This gives you flexibility if the market drops and new opportunities appear. Decide in advance how much you are willing to risk on a trade. If the price drops beyond your comfort level, accept the loss instead of holding blindly. Spot trading reduces risk compared to futures, but it does not eliminate it. Prices can still fall significantly, so protecting capital must always come first. Is spot trading profitable? Yes, spot trading can be profitable, but it requires realistic expectations. It is slower than futures and usually does not generate extreme short-term gains. However, it also avoids extreme losses from liquidation. Over time, steady growth combined with smart entries and proper risk management can produce meaningful results. The key is consistency, not excitement. If you approach spot trading as a structured investment process instead of gambling, your probability of long-term success increases dramatically. Why fee discounts matter? Most beginners ignore trading fees, but they directly reduce your net profit. If you trade frequently, those small percentages add up. That's why using the referral code rebate20 when you register through the link in the description is important. You get a 20% discount on both futures and spot trading fees, plus the opportunity to unlock welcome bonuses up to $6,200. Lower fees mean you keep more of what you earn. Over time, that difference can be significant, especially if you stay active in the market. Crypto is not about getting rich instantly. It is about understanding risk, building knowledge, and making calculated decisions. Spot trading is the safest starting point because it removes leverage and reduces emotional pressure. Instead of chasing fast money, focus on learning how the market behaves and how your decisions affect your capital. Structure always beats impulse. If you're ready to start crypto the smart way, open your Bitget account using the registration link in the description. And enter referral code rebate20 to activate your 20% fee discount and access the available bonuses. Start small, practice with spot trading, and build your confidence step by step. Protect your capital, reduce your fees, and trade with a plan instead of emotion.